Good morning, everybody. Welcome to the Flow Show. Thursday. Oh, we've nearly through my score cup yet, which I have now. There we go. Yeah, almost through the week already. Morning, Kay. It's going fast.
Morning, Ryan. Morning, Ryan. Yeah, we're running, mate. Running to stay with the time.
Yeah, absolutely, absolutely. Time is running out on one thing though, and that's our sale of our trader funding program. We can grab 30% off. Link as always in the Zoom chat there. Use that code New Year 2026 to take advantage of that. That ends January the 18th, not July, as I mentioned yesterday, giving Blake a bit of a heart attack. So get into that pronto. Right, let's go see what's going on in the world. Going to start off with some reasonably bad news.
If I may, before we dive in, I just posted the link to our NFP competition as well.
Okay, cool. Thank you very much. Yep, that's up and running as well. So got an extra prize on there, or different prize on there this month, which you can check out if you follow the link that Kay's put up. Right, so as mentioned, a bit of negative data out of Japan. This calendar doesn't give the whole picture. On the wage front, wages, real cash earnings were down 2.8% year on year. So a big negative number, only expected to fall 1.2% and from a prior minus 0.7%. Full-time pay year on year, though, came in at 2%, still a miss of the 2.3% expected. Overall, labour cash earnings were up only 0.5%. They were estimated to come in 2.3% and at a prior 2.6%. Now, the reason it's moderately bad news and not very bad news is because there's a bit of skew in here from bonuses that were paid previously. So it's a bit of a funny time for that coming in. But still, those numbers looking pretty grim on the face of it. However, when we look at the latest Bank of Japan regional assessment report, where they go around all the main regions, the 9 regions, it's a little bit better on the news front. Many regions say firms see the need to offer wage hikes in fiscal year 2026 around the same size as the current fiscal year 2025. Some regions say firms need to raise pay for permanent workers as well as part-time staff. Although some regions have said that smaller firms are finding it difficult to offer pay hikes matching the past ones that we got fiscal year 2025. Other regions, many of them are saying that firms are continuing to pass on input, labour and distribution costs via price hikes, which will keep the inflation pot bubbling. Some firms are also saying that they are considering passing on rising costs from the recent yen weakness. The Osaka branch expects solid wage gains to continue in Western Japan. The Nagoya branch head says excess FX volatility could hurt economic growth and make it difficult for firms to set business plans. So, Kay, as I say, on the face of it, those wages are not too hot, but some skew in there from those bonuses. All eyes on the spring wage negotiations now.
Yeah, and the December number, because I think they have 2 semi-annual bonuses over there if the system is still the same as 10, 15 years ago. So they could get one in December as well. So the December number may show a completely different picture on those earnings, right? Yeah, for the rest, yeah, we're still monitoring the how they will act. It's a bit yen is very, very stable if you look at well, I mean, nothing is moving dramatically in the FX world, but it's very, very stable. Those comments and restrictions from China have not really impacted a lot. So I think the market is really waiting there for kind of a new impulse if we are going to get one. We know that those wage negotiations Usually we get a much clearer picture come February. But yeah, and from now on, anytime we could have some deals or at least clearer expectations. I think last year we were also expecting February, but in January we already had some good indications about what the wages may look like in the upcoming fiscal year.
Yeah, and we had some of that late last year as well, November, December as well. And I
Mm.
might have to go and dig up the old calendar. Well, could call it a calendar. It was a note that had some of the dates that the negotiations come out, and see if there's an updated one for this year, just so we can keep an eye on it. But
Yeah. With the Takaichi government calendars, I'm not sure whether we can still rely on the older calendars, but yeah, could be a good idea.
yeah, exactly. Over at the RBA, we've had RBA's Hauser coming out saying it's still true that we've potentially seen, or Australians have potentially seen, the last of the rate cuts this cycle, despite the CPI data that they got. He says that most of those numbers were broadly in line with our expectations. So those numbers not bringing around a cut, and the market leaning that way after that anyway. Over in Germany, there's been a bit of a boost in November. Factory orders were up 5.6%. Let me go find them. There we go. A nice healthy jump versus a prior minus 0.9%. However, it perhaps is not all good news, because the VDMA, the big German engineering association, said that engineering orders fell 3% in the September-November period, with domestic orders down 4% and foreign orders down 2%. So things are not exactly moving in a straight line for Germany. Switzerland, they're still circling the drain of negative interest rates. Their CPI, as I said in our chat room, it improved, if you can call it an improvement. It came in flat as expected month on month from a prior minus 0.2. Year on year rose 0.1% as expected from a prior flat number. The EU harmonised number also looking slightly more positive. It was up 0.1% on the month from a prior minus 0.6, and up a whopping 0.2% from a prior 0% previously. We also had the SMB minutes out as well. Nothing we didn't already know before, nothing to take home from that. Kay, the CPI in Switzerland, nothing massive for the Swissy. It's same old at the moment. Will they want to see a bit of progress on that in the early part of this year?
I'm actually not sure about the CPI. What they would like to see is the export, etc., doing better after they got a bit of an improved deal from the US. I reckon, just to stop the Swiss corporates from moaning. CPI, there's very little they can do about it from SMB side, right? Apart from going into negative territory, but it's already something that I reckon the new guy it's not on the top of his mind, or he wouldn't like to have to go into negative territory, I guess. So this CPI reading is just keeping them at the zero level, and see what happens. The report said that they can see inflation hanging around here for the foreseeable future. So it doesn't seem that that is particularly what's going to drive them into negative territory. But I think if growth doesn't come along, they might have to, after all.
Yeah, because if growth doesn't pick up, they're probably going to see prices falling anyway. So it's
Yeah, yeah,
public
yeah.
sold. Staying with CPI and inflation, an ECB survey for November inflation expectations had 1 year inflation expectations unchanged at 2.8%. Were expected to drop to 2.7%. 3 year expectations staying unchanged at 3.5%. We also had some PPI data out the Eurozone, which came in warmer on the month than expected, up on the prior month. Year on year was down more than last month, but not as much as expected. The unemployment rate as well, 6.3% from 6.4%. We also had, you can see all the rest of the garbage there. The Eurozone consumer confidence number still in a negative. It has been for donkey's years, but one of the highest readings for some time at minus 13.1k. Things are looking up over there.
Well, I mean, yeah, your favorite chart. I mean,
My favourite chart. Love this
danger here
chart.
of a positive print in the next 10 years.
Look at that. It's been positive.
That's a cycle,
At
huh?
least
2000,
yeah.
2018. So in theory, 2036, we are in positive territory.
Yeah, well, if we extrapolate the distance between these two, yeah, you're probably about right in that one. Then it might be positive for about 5 minutes. Bonkers number. I don't know why they bother with it. Something else that we got ahead of time is the Challenger Grey layoffs. As you can see there, not due out for another hour and a bit, 45 minutes. Well, we've already got it. It came in at 35,500. Which was much less than the price, 71.3 thousand we got in November. That was an early leak, dropping this morning. So don't be waiting for that one later on. We've already got it. Staying on the jobs, and yesterday's ADP number, a bit of a bore fest, came in pretty much as expected, 41,000. Slightly better revision to last month as well, coming at minus 29k from a prior minus 32k. So as we've been talking about this week, jobs market, it's not rolling, it's not falling off a cliff, it's not doing hugely brilliant either, but that number coming in round about expectations. The NFP is going to be interesting because this ADP number was a negative last month, but the NFP number for November was a positive number. Despite what people may say about the differences in the report, they tend to generally move in the same direction. But as I say, these jobs numbers, they're going to be swinging around a bit. We really need to look for the trends, if any, develop from those. Jolts, that was out as well. If I can find it, where was it? Down here somewhere. Jolts, yep, that came in a little bit softer. 7.146 versus 7.61 expected. The prior was revised down a chunk as well from 7.67 to 7.45. ISM, that came in pretty well, pretty good numbers on the face of it. We saw the overall business number ticking up 54.4 versus the 52.2 previously, so a very strong number there. Prices paid moderated a little bit. Employment, that moved strongly into expansion. Was expected to tick up a small pip, but went into expansion at 52. But reading the comments in the report and some of the other numbers, it wasn't as if everyone was screaming from the rooftops and parties all round and popping champagne corks. There's still plenty of indecision, problems with prices, tariffs, and some business weakness. So maybe, obviously, the time of year might be a bit of a seasonal factor in those numbers there as well. Kay, what did you make of that PYSA?
Yeah, as you rightly say, it was a bit of a different read than when we saw the numbers came out. Perhaps it looks as if the number of companies reporting a better environment reported a much better environment than the ones who were still hesitant, because the number of respondents, if I read it well, it remained about the same as the last report. So as many people positive as negative, but those who are positive are perhaps a little more positive right now. But yeah, I don't know whether it's a December factor or not. I have no idea, to be honest. But there's still enough uncertainty surrounding all the businesses. Because let's say in a different time or in a different scenario, those kind of numbers, especially being ISM services, would have put a more solid beat under the dollar than it did yesterday. So yeah, the market is still struggling to get a real grasp of what data actually mean and how useful they are month on month right now.
Yeah, absolutely. And it's one thing that the market will take from that is the fact that that employment number was a positive.
Yeah,
So if we tie, because this ISM number is one that the market does or can, economists and the like, can rejig their expectations for the NFP because it obviously services is
mm,
the bigger sector amongst things. So then that and the Challenger Grey smaller layoffs might indicate that we could be getting a maybe a positive, more positive number than perhaps the market might be expecting. I'm actually just going to have a quick look to see what we're expecting. If the numbers are up
for
yet,
what?
non-farm payroll 66,000 we're expecting.
Yeah, and
So
the banks are mostly concentrated in that 50, 70K zone as well.
yeah. So it's possible. That services number might put a bit of an upside surprise, but we know that the NFP is an absolute lottery at the best of times anyway. We've got a positive one from ADP. We've had some positive numbers and employment out that PMI. So let's see if that translates through to the payrolls tomorrow. Right, moving on to other news. Zelensky says he still has no clear response from allies whether they will protect the Ukraine in case of further Russian aggression. So he's working on a deal with Europe, UK, and others, security pacts and whatever, for any halt to hostilities. But he wants some guarantees about what happens if Russia gets up to further shenanigans after that. Still a long way to go in there. Mr. Trump, he's added to his fleet of rust buckets over in the seas. He managed to grab 2 ships, one that he's been after, the Marinera, the meatball ship that he managed to grab. They've been chasing her around the Atlantic for a while. He captured that one as well as another one. So he's going pretty strongly on all these embargoed, sanctioned ships and whatnot. A White House official has said that Trump will meet US oil company executives this Friday. There's been a few firms talking up about looking for increased licenses and making moves over there in Venezuela. Secretary of State Rubio is going to meet with Denmark about Greenland next week. So that should be an interesting conversation. That one not going away anywhere fast. Trump has, he's gone after defence firms yesterday, putting out a toilet tweet saying that defence firms are being slow in producing arms for allies as well as the US. So he's going to put a block on dividends, buybacks, and all the rest of it and limit executive pay until they pull their fingers out and speed things up. But he's also said that by 2027, the military budget should increase by 500 billion to 1.5 trillion. So a bit of a boost there. He also has gone after housing investors, saying that large investors will not be able to buy single family homes because it's putting a bit of pressure on people who want to buy homes. So he's taken it at the moment. He's taken it to some of the they call it the stock market and some of those big investors. He also is going to step into the oil trading ring. He wants oil down at $50 a barrel as well. Kay, Biden played with oil markets when he was in charge, trying to fill up the special reserves. He liked oil at $60. Trump likes oil at $50.
Yeah, of course. The lower it goes, it's not going to help the oil companies, but they already said that they may get subsidized. So no, he wants to have it lower to proclaim another victory for the U.S. consumer, which is not far from the truth, of course, because the lower oil price goes, the better it is for other sectors and for the consumer. Yeah, he may get his wish if you look at the market, which is already pretty offered, and we are just hanging above that 55, 56 in oil, but it won't take too much to bring it down to 50, and may actually go for with one rapid dump. But then maybe below 50, I don't know. finding some bits. I was just looking at the sanctions on Russia. They are capped now at 47.5 bucks or so. So bringing US oil closer to that level should, in theory, be good for the States.
Yeah, should be. But we'll wait and see. It hasn't. It's not as if Russia's been that bothered about it. Oil
Yeah,
cap.
and to pump the oil out of Venezuela, it's going to cost an arm and a leg. At today's costs, I think they would need oil at around 85 or 90 bucks or so.
Yeah, something like that. So yeah, that's going to be an interesting watch. Now, there's something else going on. Well, before I get onto that, I was going to ask about the housing thing. If he's obviously taking on these housing investors.
Yeah.
I haven't seen the full details of what executive order he's going to pass or pass.
Mm.
But one of the big issues, obviously, with sticky points with inflation in the US is housing, particularly rentals and like. If this causes a bit of an exit on the investor front on the housing market, could see prices coming down as a flood of properties go on. That's going to be very disinflationary. Is that something the Fed are going to keep an eye on?
Uh, if and when it happens, it may have that impact indeed. It is specifically aimed at the big asset managers like BlackRock, etc., who have been diving into massively diving into the single family homes as well to stop that one. But yeah, that should be indeed disinflationary if and when that would happen. But it does not necessarily mean that they will have to sell off their stock.
Yeah,
That is. I haven't seen that in the details.
yeah, exactly. That's the big point.
Yeah, at least those asset managers have been seen a bit of selling interest in their stocks yesterday when he declared it, which is a natural reaction, I would say. But I haven't seen any decision on whether they will have to sell off their stock because that would be that would be a big shock and
Yeah,
and a good shock for the consumer, of course, but a big negative shock for the housing market.
yeah, exactly. So that's one area we're going to have to keep an eye on over the months ahead. Right. So this thing I was going to talk about. For those who may not be aware, this is a thing that's developing daily, it seems. There's big protests going on in Iran. The people have had enough of the current leadership, the Revolutionary Guard, everything going on now. They're under huge pressures from all these US sanctions, prices going through the roof, whatnot. They can't get their oil out. That's under sanction, so on and so forth. And this is probably the biggest round of protests we've seen in Iran. It could develop into something more if it doesn't get quashed by the powers that be. And Iran taking a different line could be big news for oil as well, because obviously if they get a better regime, they may be allowed to come back to market officially anyway. They're pretty much doing plenty of backdoor into Russia and China as well. So it's at the moment, I don't think the market's really paying much attention to it, Kay. But if it grows into something big,
Mm.
this could be a big development for the Middle East.
Yeah, one of those events that doesn't matter until it matters.
Yeah,
Yeah, and it could, and it's a big one for the whole of the Middle Eastern region. Instability wise, would be something if there is a regime change in Iran.
yeah. It has ramifications across the Middle East, across the world.
Sure.
So yeah, it's something just to keep an eye on. As I said, it's a developing situation. These things have happened before, but they haven't lasted. But maybe this might turn into something anyway. Right, that's all I have on the news. Anything else from UK?
Yeah, Mark brought it up in our room, and which could be interesting for the people trading metals because there's that rebalancing of the Bloomberg Commodity Index ongoing. May have already started, may be already the reason why we are a little bit lower in the metals. All the details of it are to be found in our room, and for those who care to go on the lookout, you will for sure find it on Twitter as well. But yeah, that may be one of the reasons why in the next few days we may see a bit more supply in those metals. But last year it didn't really affect much, and as Mark rightfully said in our room, the big accounts they know that and may already have been on the ball, and as I said, that may be one of the reasons why some of the metals are already finding a bit less of a demand, should I say. It should last for a number of days. So it could all be like very, very, very gradual. But never say never, of course. Those metals being volatile as they have been in the past month, could see a bit of more volatility depending on the time zones.
Yeah, absolutely. We haven't got much data out today. We do, well, what was I say, we've had Challenger layoffs out. We do have initial jobless claims coming. They haven't done an awful lot. But again, there might be a little bit of skewing here because obviously last week's numbers was over the holiday. So sometimes these numbers can get a bit skewy at the beginning of the year. But that's mainly what we've got to look out for. There's some Q3 unit labour costs and non-farm productivity and trade balance data. But other than that, not a huge amount out. Even the Fed heads are fairly quiet today. So really, not a lot of inspiration, at least from the data front, to take for moves today. I can't see anything that's really going to kick us. Euro dollar's really been stuck in the mud the last day or so. Very, very frustrating for a lot of our traders in our chat room as well, waiting for moves. We had a half-hearted attempt at 117 yesterday. That didn't last, and now we're dribbling around the 60s, 70s. So things are a bit tight. Volatility it's low, but it's not screaming lower. We're trading 5.28% in the 1 month at the monies. If we were going below 5% in the latter part of last year into the holidays. So the fact we're not going there is a bit of a positive. But Kay, otherwise this euro, it's pretty much stuck between this sort of 117.5, 116.5.
Yeah, exactly, mate. It's all very, very slow. I would say, though, if you look at some of the euro crossers who are better bid, that seems to be holding euro dollar even more in that range. So yeah, not specifically euro yen, although that's finding yeah, that one, euro sterling, I think is one of those, and then a few of those euro commodity crosses as well, right? Euro Aussie, Euro Canada, holding up and being a bit higher. I think it has to do with what's happening in the euro dollar just being stuck where it is right now. I mean, there is no real catalyst to make it move dramatically either, right?
Yeah.
So yeah, that's what's going on in the euro dollar. For the rest, yeah, it's hard to see much moving. Dollar yen is, as we already said, pretty much stuck as well in between the big figures. Give and take 15 pips. I saw what Ali says there, a bit long dollar yen. Why not? I think it's a bit of a natural direction, but yeah, I would be really careful in the more medium term. Short term. It's probably already going to be low 56s, but yeah, that we all the bigger levels are remaining untested right at the start of the year. Maybe you were just waiting for tomorrow, Ryan, on
Yeah.
to see stuff move because we have that double leg NFPs and whatever can happen on SCOTUS. And even emerging markets are extremely quiet. Dollar China just below 7. Dollar Mex is trapped as well in between the goalposts of the past week or week and a half. Yeah, 1805, 1785, 87. You got like a 1% range there. It's all pretty much stuck, and I think barring headlines, which obviously they're always possible. But barring headlines, there's not a lot that's going to take us out of the ranges that we are trading right now. I would argue yeah, I would say that just take away euro dollar, it just still feels like the dollar isn't doing not too bad.
Yeah,
And yeah, maybe that is something that we are going to see, but it's a grind. Or if you are on the other pairs like euro dollar or cable, cable is a bit lower, but it's still not overly convincing, right? We are not dropping away. The vol is just too low in FX land right now.
yeah, yeah. I think we're open to some pendulum swings. Yes, the dollar's looking a little bit better this week, but
Mm,
we get a negative NFP tomorrow,
exactly.
a real stinker, and then the market goes into rally sell mode again until the next good bit of data, and then it flips around,
Yeah, that's where
which
we
is
are.
which is okay. You just got to roll with the punches
Mm,
like this. Going back to dollar yen, just this week, we're just in a uptrend. It's not major, but just the price action this week since Monday after we got this sell off, it's been creeping up. Higher lows, higher highs. But then we got a big level here, 157. If it fails there again, as it did into it overnight, then maybe we get a bit of a steeper pullback. But is that going to be enough to take out this 156, 1520s, and maybe even have a crack at the figure and get down to some of these lows? So yes, I mean it's the same thoughts as UK with Ali. You're long here in the middle. Yeah, it looks okay. You need it to get through that 157. If you can't get through there, and we know it's a bit of a tough nut, you've got to be careful. But if it does get up through there, that will give this upward momentum this week. It might help a break, and then maybe we see where that goes. It might be a bit of a stretch to see us getting up to 158s again, but we could certainly go and have a look at this prior high 157.30s, maybe getting into this sort of area, the 50s again. But it's all pretty slow going for me. One pair that is moving is dollar CAD. That's looking quite buoyant. It's got a decent bit of range to it still, bit of volatility there. We had another move into the 138 yesterday. That failed. We pulled back, just found support ahead of that level that we broke above, and found a bit of support on Tuesday. And the bounce from there has taken it right up all the way through the levels. It even broke this big old 38, 60, 70 area, and we're just having a little pull back, got close to that fib, and now we're pulling back and testing this line again. If it holds here, and I might have a little nibble, find some decent support here, then it could keep this move going, and then we have a little ping up to
mm.
139. But really, I know you've been training bits and pieces around. I'm not sure I'm in the mood yet. I had a little nibble. My first trade the other day was a loss, only a little piece, but I don't like doing that the first time in the new year. But I don't know. I'm not feeling inclined to do a lot at all, Kay, at the moment.
Yeah, gotta be choosy, I think. Yeah, I had a, yeah, just looking at the individual currencies. Yeah, I picked up some euro sterling, sold some cable yesterday, so that's going all right. Um, but I mean, it's a big exercise in staying away from
Yeah,
what could be dangerous. Yeah, I was long Aussie, let it go yesterday because I didn't feel like it anymore anyway. And again, we are seeing stuff like we have seen those kind of moves so often. And for instance, that move on the Aussie up to 67.60, you get like that decent move, and then you're giving it most of it back, and we're still in that kind of market where what apart from Canada, because I think in Canada there's a different issue now because the market is kind of expecting the US to get Venezuelan oil, which if I'm have to believe people who comment on it, who are much more knowledge about that stuff than I am, but could really challenge the Canadian exports to the US. So I think that's what the market is trading in Canada right now. So that Canadian dollar could really remain more vulnerable than others like MIX, for instance. And technically, it's been going as well. And as Michael says, there's been some technical patterns being broken as well. So, but for the rest, we're still in that market where it goes one way and then it comes back to trade somewhere in the middle. And yeah, and for as long as we're still in that scenario, we can trade. We can trade quite a few things, but you be very selective and find currencies where you have something really going on. Like for instance, euro dollar, you're in well, there could be an argument after yesterday's ISM to be a bit longish dollars. And for as long as you're below 117, perhaps it's going to remain a little bit heavy, test of 116 and a half. But there's basically not a lot going on between EU and US, right? So you have to look at currencies, just individual currencies, to see what's going on. Like if you're trading antipodians, for instance, Aussie Kiwi, the Kiwi is still the weaker sister of both, because we are still seeing bids in the Aussie Kiwi. So themes are ongoing, but you really need to be a bit choosy on what you do.
Yeah, exactly that. And the Aussie Kiwi's got a bit of volatility to it as well. That one was interesting because obviously we had that pop up on Wednesday back down below. This is a prior high that goes way back a few years, and we're just struggling in there again after you get a shock moment. These levels reassert themselves. So if you get another break here, then it might be off and running again. If we fail to get through this level again, this 1660s, then we're probably going to be seeing a steeper pullback. Then you got to look at this 25-30 area for where
Just
dips
around
go
those
to.
prior highs there.
Yeah, exactly. And some of these older levels going back. But yeah, it just feels like a bit of a low conviction market at the moment.
Yeah, definitely. I think that the players are, or I am doing probably what the other players are, the funds or whatever, the quick ones are doing, is like take your money and run and think about something else, or the same theme but re-enter at different levels also. And yeah, it's by no means a trendy market, in FX at least. Huh?
Yeah, and Michael, I'll leave you in charge of the crockery technical analysis there: cups, handles, saucepans, and pots, and whatever you like to get into. Yeah, we're having a quick look at euro sterling. That's looking like it wants to resolve to the upside of this zone I've been highlighting, but we ran straight into the 86.90 level, and that's where we can't get through. So this 86.90, 87 was always going to be a testing point for that. If we can't get through here, then we're probably going to put this rally to the test. If it bounces off this zone, 86.70s, then that might be the trigger to actually send it higher. Going to be interesting if we do push higher, what happens at this 87.20. It was absolutely solid through a big part of December. Then just over the holidays, it all washed out a bit. You can see in there it was support, then a bit of resistance, on and off. Can't take too much from that. But we've come away. If we go back there, is it going to mark a bit of a top, or are we going to carve through it and crack on up? So there's lots in the mix for that. If we come back into this zone though from this test up here, then we're probably in for a bit of sideways action between 86.5 and 87 for a while, and we'll see what happens after that. Right, Mr. K, let's
right. We've already been looking at quite a lot, Ryan. I don't know. What do you think? Shall we save the rest for face? So people can have the look in face, because we've already been chatting about a few things, right?
Yeah, we can do. That's not a problem. Have a nice early one. There's not much to talk about anyway. So, and don't forget, you can talk with us all day, every day in our chat room. So if you're not a member, come over Forex Analytics. You can join us there. I think we've got our trial dollar for 10 days on at the moment. So you can get yourselves in there and up to speed and everything. Right then, we'll call that a day then. Thank you very much, everybody. Thanks, Kay. And we'll see you later on Face. If not, we'll see you tomorrow.